Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, the 14th of October, 2014. Hope you're having a good trading week. So what do we have here? This is the first day of the week from a bank holiday perspective. What I mean by that is obviously Monday the banks were closed, so we ended up with a trading session without the banks. It's kind of unusual to get movement in those trading days. There's 2 days a year where you end up with the banks open, the banks closed, but the stock market open. That's Columbus Day and Veterans Day. Usually the markets don't do anything at all because the bankers are all out. But because we had sort of started a sell-off last week and there's a lot of uncertainty out there, and I think maybe this Ebola stuff is playing a little bit of a role, whether that's warranted or not is uncertain. Plus, we're right at that time of year, October, where the markets do tend to kind of roll. I'm not surprised that we at least got some action, and we had some nice trades in the first hour. And in the end, volume in the market was solid. We traded about let's take a good look at it, 2.2 billion shares on the NASDAQ. So that's pretty good trading for the session. So, it was a little surprising, but, we'll welcome the early start to the week, and hopefully now it gets even better. We'll get some everybody back in and get back to work. Obviously, you can see what a 2.2 billion share day does for you. The market moved around. Here's a look at the ES. This is the front month futures contract for the S&P, and this is the daily chart. And we did drop today, and that takes us back to the lows of August. So we talked about this in the weekend report. Markets are still up solidly for the year, although the news channels are suddenly focusing on the Dow Jones and how that's not up for the year, but that's all of 30 stocks. We're up solidly for the year. We're still within 100 points of the highs on the S&P, and so I wouldn't. It is certainly a setup for a breakdown. And as a couple people in our room were noting that are newer to trading, seems like stocks go down a lot faster than they go up when they go down. Yes, that's true. That's why you got to stick very carefully with the direction of the market. And right now, I would tell you with this setup, if we do break lower, it could get fast and quick, and you can make a lot of money as long as you're not trying to buy stocks. We are not here to try to catch a falling safe, if you will. So the only time I'm even going to be looking at longs, and they would definitely be held pretty tight, is if market direction intraday using our tool is actually green. Outside of that, you've got to be favoring the short side here. And if we do start to break, let some of these trades play, because the big down days that'll occur, and we could be getting near some of them. I don't think Friday and today is necessarily big down days. We could be getting near some of them. There's a lot of money to be made on the downside, and then you look back and just be happy you weren't long. What's the target on the downside? Well, we don't do targets. It is the middle of October, but I would love to see this market settle back to 1,700 on the S&P, which is 200 points lower, and get there in the next 10 days. Do I think this is going to lead to the ultimate crash and the market's going to drop 50%? No, I don't. I think that it's just that time of year and this is normal. And, just to anybody who's been with us for a long time, there's nothing about this that should bother you in any way. But if it does turn into something even bigger than I'm looking for, no problem, because we don't buy stocks when the market's heading down anyways. It will have no impact on us. But that's just not what I'm expecting. I think, 3 weeks from now, from whatever level we're at, we'll be starting to look at the push into the end of the year. Maybe it takes into the start of November. But there are still likely to be some tech stocks that are up solidly going into the end of the year. I should also point out that they were the ones, a lot of these tech stocks were what got hit hardest today. Here's a look at Tesla over the last 2 days, down almost, we'll call it 50 points. Apple's sort of held up. It's just sitting under 100. It's been pretty dull of late. Google sold off sharply the last couple of days. Here's a look at Amazon, also looking to break a low here. I've got a lot of signals going off as I flip through these stocks. Amazon looking lower. Netflix was down a lot today. Ouch. Priceline. Ouch. Okay. So we are seeing the bigger tech stocks fall apart, but that's more than most of what we're seeing. Matter of fact, late in the day, the advanced decline ratio on the NASDAQ was only negative about 200. I didn't look at the final number. I don't have it up here, but that is not too negative to be only 200 more stocks down than up on a day like today. But again, I think a lot of the stocks, even though we did get a sell-off, the bigger players were not around. That does have an impact. Here's a look at the crude oil inventories. Swept a new low down under 84 and came back a bit. We're in our 9 bars down for a startup phase on the crude oil inventories. Gold was up. Let's take a look at the NASDAQ side. Made lows under the August lows. Broke that red static trend line. Again, here's one that if you go back, came into the year at around 30, 35.75, let's call it. So we're still up 250 plus points on the Nasdaq for the year. That's big up. Here's the SOX, 2 days in a row of a beating there. Biotech starting to roll over. This is still fresh and very near highs. Nice cup and handle formation that's just finally rolling over. Obviously, the red line's the first target, static trend line. All right, so that's what we saw. Let's take a quick look at the 5-minute chart of the futures just so we can see what the actual action looked like on this Monday that was a bank holiday. Some interesting stuff. We had a Comer count. That's the purple, the magenta numbers. Coming in from Friday, we were already 12 bars down at the close Friday. We know 13 is the buy signal, and then that gives us the risk line that should be support. And so our early trading was flat. We actually headed up for 10 minutes. We had market direction green for about 10 minutes today, and then it rolled over. And it doesn't look like much here, but that actually was about a 20-point drop. We covered average daily range on the ES in the first hour, even though there was the bank holiday. Found support right at that risk line. Drifted back over lunch. Now, you can't see it here, but the high of the day, we hit it twice, 10 minutes in, and then later over lunch. That is exactly the pivot on the ES, so that's an important technical point. And we hit it literally to the tick both times. Rolled over and kind of glued to that VWAP, and then in the last hour or so started to roll over. Once we cracked those lows, volume was heavy. I don't know if we couldn't find specific news if there was any, or if it's just the fact that they had that as sort of the this is where we'll panic a bit mode, and even though not everybody's here, but look at that volume late in the day. And again, if you go back and look at that volume on the front month contract on the daily chart, what do you notice here? Basically the biggest volume of the year on this day down. So beginning of a little bit of panic, potentially settling in, and again, that doesn't mean that it's over. Let's not try to catch a falling safe. One last look, and that's at the VIX. Just on the daily chart, and you can see this is heading up. This is what happens. The VIX measures complacency. Under 20, we've been complacent. Now we're starting to pick up into panic mode. The VIX over 40 is usually the capitulation move, so we'll be watching for that if we get there. Like I said, it could still be a few days away. You can cover 200 points on the 250 points on the Nasdaq and 150 on the S&P in 2 or 3 days on the downside. The VIX will be over 40. A lot of money-making opportunity if you stick to that short side. And then we can start to look long again after the panic is over, potentially. That's it for me. We'll be in the trading lab, as usual, calling it as we see it. Charts, as usual, brought to you by eSignal. Hope you have a great trading day.